Good afternoon, everyone. Hope you're having a very relaxing holiday Monday here. Just wanted to do a really quick video. Uh, some little background coming into this week. As you know, I've been talking it up in the chat room and a couple of the emails how I really like this setup that we've been seeing in the Dow Transports over the last couple of weeks. Even with the large moves that we've had in place, the transports have been making higher lows and look the strongest they have looked really in the last year plus. And we went over all the reasons why in the video I did a week or so ago, why that is a bullish thing. But tonight, well, actually, already it happened. Awful is probably not even a good word. Horrific economic data out of China and Japan. So, of course, the Japanese market is up 8%, 1,100 points. The Chinese market is up 3%. Oil is up. European markets are up 3%. But really, the underlying story is instead of devaluing their currency, you recall a few days ago, China came out and said that they were going to attack the likes of Soros and those other hedge funds who've been shorting the yuan and telling them not to do it. Well, the Chinese came out and they actually raised the yuan valuation, and that's what set off this big rally. What's going to happen tomorrow? You know, there's a lot of chatter on the boards, everyone talking about how the market's going to gap up big, it's going to be a huge day. Yeah, that's a very distinct possibility. We've got the futures up a couple of hundred points, but how often have we seen the U.S. markets do totally opposite of what happens overseas and totally opposite of what common sense is? But, you know, we're going to go in tomorrow. If the market gaps up, so be it. It would be actually nice to see some stabilization in this market because we see so many stocks just ready to go, but the volume is MIA. There's just no volume because you can't blame most traders. They don't want to be in stocks, and the liquidity has dried up. We need some stabilization in the major indices. Even if it's a stabilization and a slow move higher, kind of like what we're seeing here on the transports, that would be very, very bullish for the kinds of stocks that we play. Looking at those kind of stocks, let's check out a chart of the IWC. This is the microcap, the iShares microcap ETF. And you can see this just brutal downtrend that's been in place since the start of the year. Down from 73 all the way to the lows that we hit on Thursday at 59. That's what, 14... I mean, it's essentially a 20% drop over the last couple of months. Downtrend break is 61. 38% fib retrace is around this level that we saw a bounce late last month at the $64 level. So that's a 5% move on a 61 trigger. So a potential trade here for you guys looking for that. Now, this isn't a very volatile, or not volatile, heavy volume ETF. So if you do it, play it small or grab some options perhaps. But got $3 upside followed by a move up to 67. So you've got $3 to $6 potential upside, $2 downside if you want to participate in this kind of move that we're going to see here. Another ETF that looks really, really good is the IBB. Now, this is the epitome of volatility and action in the market, and you can see the similar tank that we've had since January. Downtrend breakout is at hand. I would say it's around 253, 54, 55 would probably confirm it, and the 20-day exponential is at 267. So that's a potential $13, $15 upside move, which is nothing. I mean, that's 5-6% upside potential move up to the recent resistance level, and then if it really gets rocking and rolling, you've got $45 potential upside. We're also looking at a positive MACD cross. Stochastics have been bottoming throughout this period while it's been selling off. So there's a positive divergence that we're seeing here in the stochastics, which is also a very good sign. And, you know, part of the reason why we've been so slow at the start of the year is most of the speculative money is usually in biotech stocks. Look at this chart here. Is it a wonder that we've not been doing a whole lot with this kind of decimation in the sector that leads the kind of stocks that we play? We could be looking at a potential turnaround here in the near term. Dow daily chart. The positive to be gleaned from this is we have made higher lows on each of these tanks. Now, we came pretty close to testing it there last week, but we saw that solid bounce back. So that is a bullish scenario here. 50-day moving average is at 16,800. So I would be very, very surprised if we don't at least touch the 20-day, so 200-point upside at least tomorrow. I'm thinking, again, anything can happen, as we've seen many, many times. When we see this kind of bounce, usually takes a couple of days for stuff to turn around, but the way everyone's been sitting on the sidelines, if we see a pretty substantial move in the first part of this week, Tuesday, Wednesday, we could see a lot of stocks rebound very, very sharply. So if you go and look at the number of stocks that are down big over the last month, it will just blow your mind. Now, gold has been the bright spot. I mean, this is about a perfect of a cup, as you can see. But gold has gotten extended. And if oil is moving and the market is moving, we're going to see a slap down potentially in gold over the next few days. Now, the 20-day is far below here. The 20-day is about $8 away to the downside. At a minimum, we should see at least a retest of that previous break level. So that's a potential $2-3 downside short. I mean, look how overbought RSI is here. So it was coming down anyway. The rally, if it holds into tomorrow, should make this move down even quicker. So we're really not going to go over any charts because we got to see what's going to happen tomorrow. But there are so many beat-down stocks that once we start to see the stabilization, we're going to get rocking and rolling. Now, I went over this in the chat room on Friday. We haven't been very active this year. A couple of reasons for that. Liquidity has disappeared, and I don't want to be calling stocks for you to make 2, 3, 4 cents when you could be losing 10, 15, 25 cents. I'm not going to call 50 stocks so that we can get 1 or 2 to move. It's just been that kind of market. But when those kinds of markets ends, it gets very, very fun, and the right set of circumstances, we can play catch up 2 months of gains in a very, very short time. So it's a matter of being patient, protecting our capital, and when things are ready to rock and roll, we pounce. So have an awesome rest of your holiday weekend, and I will see you all in the chat room tomorrow. Bye.